Hey, good afternoon, everyone. Trader Tim, eMoneyMind.com. It's Monday, so of course we're doing another Monday market analysis video. Today's January 14th, 2019, and a couple of really important things to talk about today. So, not much has changed in the larger picture. If I zoom out to the weekly chart, same thing as last week. We've got this big retracement long below us, and then we've got this second leg of the retracement short. First one above us, like so, and then this is the second leg down from the high down to lows. And you can see how we're kind of right between the 50 and the 61.8. So if I go back to the daily chart, this week and end of last week, very, very quiet. If we look at the SPY, we can really see the increasing price, but the decreasing volume. And so this movement here, where we start to flatten out, definitely feels like it's sort of topping out, and I would not expect a sell-off here. We may push higher. We've got some resistance still a little bit more above us. These lows from back here in November kind of line up with highs where we're at, but the real resistance is not for a little bit higher. But if we look at the high from the 10th, so this is the highest high in this rally, January 10th. So what I do is take that low. If we break that low, then I would look for, or I would kind of expect, a bigger body candle to the downside. So breaking the low of the high bar is what I call that. When we break the lowest price of the highest bar in the pullback, the low for the day of the bar that has the highest price in the rally. So low of the high bar break, that's on the 10th. And so tomorrow, as long as we don't break highs, then that day still stands. If we get another leg up and we push higher, then we would use whatever that bar is as the low of the high bar break. Now the 61.8 of this short is at 26.26s, and like we talked about last week, if we draw the full retracement short, that's above us at 26.42. So I would expect some sort of resistance at that point, 26.42s. But in the meantime, very small ranges on these last couple of days. Notice how Friday and Monday today have been inside of Thursday. That being said, trading has been all right. We've been gapping each day and sort of coming up and closing the gap and not really doing a whole lot more than that. Today we weren't able to close the gap from Friday, so that remains unfilled. But some decent trades this morning. How I played things, I let the market open up. Mondays I kind of usually take it a little bit slower to start things off. I've got the high and the low marked of the first 30 minutes. And then I noticed right away from the first 30-minute kind of low to high, decent trending to the upside. However, we had a high tick that lined up with highs at 53s. I should also point out, these low ticks right at the open, I just ignore those for the first couple minutes. We're almost always going to move to the zero line, and those are so extreme at the open that they don't really give us much actionable data. So we had a high tick that lined up with highs at 53s. Even though the gap fill was above us and we were trending up, I went ahead and took that as a short, basically the very first short after that high hit. So that was an 80.50s. And I rode that down. I got a little bit choppy down here and then got stopped out. So a couple points there. At the same time, as soon as I draw a short, I try to find, where's the opposing, in this case, long trade. So I drew all the way from lows to highs. We didn't quite make it there, but if I draw from highs to lows, I can see when we break the 61.8 that short is now failed. So I took the little short up here, wrote it down, and then took a little bit off and then it came up. I had my stop above this swing high here, and got taken out over here. So for a couple of point gain. Once this bigger short broke, I put the long in play, and I just took the very first long setup on the 512. So anytime we have a 61.8 break in one direction, you can turn around and take the next setup in the other direction. So the very first long, 79s, or you could use a 79 and a quarter. Either one's fine. But the idea is, getting long, riding it, taking, if you've got two contracts, take one off at the negative 23% target, or one off at an arbitrary 2 points. If you've got 3 or 4 contracts, I would still encourage one, maybe two. The idea is, you don't want to take all your contracts off for a point and then just have 1 or 2 left to trail. The idea is to stay in the trade as long as possible, as long as it's going your way. So it rallied, pulled back. Once it broke out again from new highs, I just moved my stop underneath the next swing low and just kind of follow that up, trailing your stop underneath swing lows. Now, in this case here, we rallied, we pulled back, and then we rallied again. So the swing low that took me out of the trade was up here. And so sometimes they can be a little far away. Other times you get the smaller pullbacks and rallies, and you can, bringing my stop from here up to here is a big jump, but then it keeps you protected. Once we made that little bit bigger pullback, I drew from the 50% that was about where my prior, this 50%. So notice here this larger setup, which would also be visible on like a 5-minute chart, that hit its target up here. And so taking the next from entry to high, and then coming over here, drawing the opposing, letting that 61.8 break. I'll get rid of this, clean it up a little bit. So letting the 61.8 break, and then taking the very next long setup in the trend. So 82s, 82s and a quarter, and then riding that up, taking some off at the first target or negative or 2 points, and then trying to trail your way. Let it pull back. Once it breaks out to a new high, I just bring my stop up underneath the swing low. In this case, also, it touched the larger negative 23% target. Back up here and get a little bit cleaner chart. So if you've got, so let's say in this case, if you have 3 contracts and you get long at 82 and a quarter, which happens to be right at the top of the first 30-minute range, just a great opportunity for a long. You get long there, you have 3 contracts, you take one off at the negative 23% target, and then you take the second one and you put that target out at the negative 23 of the bigger setup, so we'll just call it 27s. And then you trail the third below swing lows. I mean, being able to break up your trail stops with different methods and have different targets really makes a huge difference in your trading. So if you can trade on a sim account with multiple contracts, it's very, very good practice as opposed to just trading one contract live. All that's going to do is, if you're trading one contract, the goal should be, the focus should be, how can I gain control over my emotions? I'm not going to, be able to make a ton of money with one contract. So if you put the emphasis on, okay, I'm trading one contract because I want to be able to manage my emotions. If I move over here to sim and I trade multiple contracts, then I can really, practice and master my method, master my exit, multiple exit points, multiple targets, and that's really, what trading is all about. So putting the two together, having the mastery of your strategy and your trade management, but then also being able to master the emotional side of the game. So if you can split those apart, work on the two separately, then put them back together, then you'll accelerate your trading a lot further and a lot quicker than if you try to do all of them at once. So I hope everyone has a great week of trading. If you want to check out the live trading room, you can do that tomorrow morning. Just go to emoneymind.com/VIP. Thanks and have a great week.